I welcome you to another session of the free class hosted by CF Trading Up. And in this session, we'll be talking about fair value gaps. So, fair value gaps. What do fair value FVGs? What do they mean? They mean fair value gap. They are all the same thing. Fair value gaps, FVGs, imbalances. So, different names, but still what? Different names, but still same meaning. No. Yes. So, basically, what do they mean? They mean what? They mean displacement in price. They mean what? They mean displacement in price. So that is basically what fair value gaps mean. Yeah. So they mean displacement in price. And what do we mean by displacement in price? So they are just what? They are three candle formations basically. They are what? They are three candle formations in which there's a what? There is a gap between what? The second candle. So yeah, that is what a fair value gap means. Yeah. The first thing I want to say is this. Whenever we talk about fair value gaps, there was the recent displacement. Now, what do you want to counter displacement? This is what this three candle formation. You can see what they are moving towards one direction. They are what they are moving towards one direction. Let's see these what these are not upside delivery like this. Let me draw a trend around it so you can see what I mean. Let's say you have this, and we have a pullback, and we have this. So yeah, so going in the direction of this particular upside and seeing a break of structure over here, you can see what these candles are printing bullish candles repeatedly, consecutively, without any bearish candle in between, and they are pulling on bullish candles, with what? With momentum. So that is what those are fair value gaps. They represent what? They represent this business implies. When price is what? When price is moving towards a direction with what? With force. So this is what? This is a bullish force. There is no bearish candle over here, and it is showing the fact going like this without what? No, let me just make an analogy over here. The fact that we couldn't the both the wicks of the first and third candle over here couldn't overlaps in between in between the second candle shows what? Shows the fair value gap, shows displacement in price, shows price is trying to move towards its desired direction without what? Without delivering what? Without delivering they are moving what? Towards buying direction without delivering a balanced price range for what? For sell side. So this is a buy side imbalance and what? Sell side inefficiency over here. And like I said when we were talking about market structure initially, I said price. Whenever you say price, for there to be a balanced price range, a balanced price action in the market, there has to be what? There has to be a balance and what? Both buy side and what? And sell side. Both in buying and what? And selling. So in this scenario where we have displacement and where we fair value gap over here, price is what? Is gyrating towards buy side directions without what? With inefficiencies and what? In sell side delivery. So there is buy side, there is imbalance in what? In the buy side. Only buy side is being what? Offered over here without what? Without equal delivery in what? In sell side. So that is where it was. You have sell side inefficiencies over here. You might not actually get the theory behind it yet, but you actually just want to what? Understand the practical practical explanation I'm giving you. So that is what a fair value gap just made. And like I said, it is what is a POI too, or a point of interest or an area of value. So, and what you want to see about point of interest and area of values are what? You want to see them come like this, market test into them and what? sponsor what the next break of structure. So basically, that is what that is just it. That is just it. So you want to see what over here. You want to see them as what as a demand block. Fine, they are not blocks, but they're also blocks. Because the over here like this sell side inefficiency. This is a block too, or whatever you want to call it. This a demand zone. You can call them zone or whatever. So once you see price tag into them and what. So now the moment price tag into them, this was the sell side inefficiency that was undelivered before has not been delivered. There is now efficiency in what in price. There is now a balanced price range over here. So initially this was an imbalanced price range that was with buy side only being delivered. That was without proper sell side being delivered. But the moment we actually put back into it and we actually delivered equal sell side, then what had happened? There is now a balanced price range over here. So that is just it. And basically for a downtrend, it is what is just opposite and the same too. So you want to say what? Let's say you have this. Let me move this. Okay, let me just. So we understand the rates. Use are just weeks. Use another week. So in between the week of the first candle and the week of the third candle over here, the gap left within the second candle is what? Is there your fair value gap is? Now I said they represent what? They represent the splitness in price whenever you see price moving towards the dark. Now in this case, this what? Price is moving towards what? A downside direction over here. Yeah, B is just it. B is just it. And a break of structure over here. A break of structure over here. And this is a fair value gap. And you want to see what? You want to see a pullback into that particular fair value gap. And what? On downside continues being delivered with another what? With another break of structure over here. So this is what? This is an example of a fair value gap in what? In a supply level. So yeah, this is a fair value gap. And what else do I need to say about it? I've said everything I need to say about it. You can see what there is a splitness in price. So only sell side is being offered over here with what? With a good force, with momentum, without what? Without equal buy side being offered. So that is what it caused an imbalanced price action over here. So sell side is being offered without what is a buy side being offered. So to actually get a balanced price, then you have to go back and fill what and throw that particular fair value gap to actually create what a balanced price range for both buys and what and sells in the marketplace. So that is just it. Let me be chat and look for some things. So let me just go to another time frame first. Yeah, just so you can see what the fair value gap actually represents over here. So this is fair value gap over here. You can see it. See this gap over here. See the gap over here. See the gap over here too. Now, talking about the way fair value gap is being used. It's actually let me out that is it. So you already know what fair value gap is. Here's another fair value gap over here. This particular candle over here, you want to see this particular candle and the candle over here, this particular last candle over here. The particular third candle to it. Yeah, you want to see it. And instantly, what do you see? The market tapped into this particular fair value gap over here and continued delivering up sell side over here. Now, the way you use another block, you want to say break of structure, you pull back into that particular other block and the left with structure. It is not particularly so for fair value gaps because there are fair value gaps in the market, everywhere in the market. Whenever you see price moving towards the direction you want to, there's always a fair value gap over there. There's always a fair value gap whenever price is moving towards the direction. So these are fair value gaps. This is a fair value gap here. Another fair value gap over here. Another fair value gap. Fair value gap. Which one do you want to use? Which one is valid? How do you know which is? So for you to know which valid other block, which valid fair value gap to actually use, you want to do what? You want to actually analyze the structure first. Look for your premium and discount side of the range. After doing that, you want to say what? You want to see if you're actually in a downtrend, you want to see what? A good fair value gap in what? In actual a supply level. So that is only when you can what? You can use fair value gap. So without doing that, you actually know you won't know where what which fair value gap to actually pick or to use. But you actually put in other concepts or other conferences or other analysis stuff to it, you actually know where to actually need. So let me just give an example over here. This is gold, but there is no clear structure over here. So you can see this is another block over here. I picked over here and you can see the market properly coming into fruition. So I actually share the setup with everyone. So you actually took it. Congratulations. So there's nothing clear to actually see over here. So let me just go to a pair like I think my network is going to stop again. Oh god. 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 Let me use another one. Okay. There are things on this too. Okay, so let's just use this. I actually didn't get into this count over here, but this is a face value graph over here. And what do you see on market tested into on price tested into that fair value that we can see what it actually what respected it down. Don't show the next block of structure. This is also another example over here. This is a fair value gap over here. Over here too, there has to be a fair value gap over here too. Not in this time frame actually, but we'll go to a much lesser time frame. There's a fair value gap over there. So this is another example of the market testing as a fair value gap and what I'm expecting it. But basically, you don't use fair value gap just anyhow. You use this in conjunction with what? With a lot of things. With a lot of things. Talking about a lot of things, basically when you want to pick a valid order block, we've talked about order block before. When I want to pick a valid order block, the most valid order blocks are order block that is followed out by displacement by fair value gaps. The most valid order blocks, the most valid form of order blocks are order blocks that's what followed by what displacement, which is what fair value gap. So those are one of the ways you can use what order block and FVGs together. In that case scenario, you won't pick your fair value gap, you pick your order block, but having a fair value gap following what an order block shows strong conviction for that order block, shows the other block being strong, unlikely to to actually hold price. So that is one of the ways you use fair value gap. So sometimes you don't just use it to actually pick an entry. So sometimes you use it to in conjunction with other stores. So let's just look at this example. You can see what another block forming over here. After the other block form, you can see what a fair value gap over here and a tiny block of structure over here. The tiny block of structure over here. Apart from the tiny block of structure over there, you can see what? Use also block of structure, a block of this low over there. So you can see what the market pulling back into that particular order block out and tested it before what? Downside continuation. Also, this is also an example over here. This is another block over here. After the other block formed, what do you see over here? You see displacement, which is what? Fair value gaps over here. Initially, price has what? Tested and respected this particular fair value gap. You can see it over here. Yeah, price was tested and respected that particular fair value gap and what? And broke this structure. But after that, price did what? Came for this other block. Why? Because it's a strong order block. Why is it a strong order block? You see, it's basically after that particular order block, breaking the structure and the structure again. So makes it a valid order block. Well, price actually what? Come back to. And just like that, you have to what? You have to know how to internalize. Internalizing structure is actually very important. The fact can actually pick a bearish order block over here and over here. I can see what? Price is in a bearish structure already. This low has been broken. And I can see what? I can see this movement toward the long side over here. So I had a bearish conviction before I actually started looking forward. Bearish prices. You can see the structure is very, very important. So and down it goes like that. It goes down like that. So if you're looking for more examples, there's always on the charts. You actually always see it on the charts. This is a case scenario where the market is actually expecting a fair value gap. Switch this over here. So you can see what happened over here. The market tested into that particular fair value gap and did what? And went up. So if you want to trade something like this too, you can with those sorts. Place your long position too. Right before your cable gap and do what? Play your stop loss. Now when you want to place stop loss for this particular, so something like this, like I said initially, when you want to actually make a fair value gap, a strong conviction fair value gap, actually you want to see what you want to see another block around it. Now this is a very valid other block over here. So in this case scenario where I have another block, I can actually what? I'll actually place my stop loss below what? Below the low of this other block. Not what? Not below this fair value gap. Why? Because I actually expect price now actually want to come for this other block before actually goes up. So I'll be placing now what? My stop loss over here. My stop loss below the low of this other. In fact, if I actually want to use something like this, I won't actually have picked this particular fair value gap, even though that's what the market respected. I won't have picked it. I'll have picked this particular other block because I like it better than this particular fair value gap. But in such a case where you want to actually pick this, I will actually put my stop loss right below what? The low of this particular order block and target what? The next eye over here. I would have targeted this eye. I could have targeted this particular eye too. So yeah, this particular eye over here. This particular eye over here, I would have targeted. So with them, whichever one being targeted, you can see price actually does hit our TP and what? Before actually starts coming down again. So, but your stop loss placement is also very, very important. Just the same way you place your target objective. In this case, I would have actually played my target objective over here too. We actually do this particular trade too. So, it's always up to you. But you have to actually be very professional in doing it. Very professional in doing it and very, it's very, very important. Your stop loss placement is very, very important. So in this case scenario, I'll place it right below this particular order block, not below this particular FVG. Why? Because I know this particular order block is valid and 5 might actually want to test it, which is very, very risky. So you don't use it. You don't look to use tiny SLs. It's improper and even unprofessional. So you've been using tiny SLs before just so you can minimize your loss or whatever. So that is very, very unprofessional. So also, you can see over here. And before you actually say you want to pick um a bullish order over here, you can see the market is actually bullish initially. So there's nothing wrong with putting a bullish order over here. And sometimes too you can what? When you actually know how to internalize your structure properly, you can pick both trends and counter trend trades. So this will actually be a counter trend. The market will actually be bearish and I'll say bullish setup and pick it. So depends on how you know how to analyze the structure. Proper structure analyzation is very, very important. So when you know how to analyze the proper structure, you can actually pick whatever trend you want to pick and trade off whatever. Though it is what? It is very crucial to actually note when you are picking a counter trend trade, the actually what? Your risk analysis should actually be very, very what? Very, very important. It's just like it should be low compared to when you are what? When you are trading the trend. So trading against the trend is actually something not a lot of people can do. So and just like that, that is the about fair value gaps. So you can see there is always what? There is always a fair value gap in the marketplace. But since there is fair value gap everywhere, you won't know where for each fair value gap to pick or which fair value gap to use. So that is why you actually have to join other knowledge with it before you actually start using fair value gap. So it is very, very important. Other knowledge like other block, you picking other blocks, you actually use other block before you start using fair value gap. Use a value level block over there. But the market don't expect it. It almost that bit actually. This is another other block over here. I think this particular one would be expected. So so this is another block over here too. So this is an inducement, but we'll go into the concept of inducement later. This is an inducement and this is a break of structure over here. This is also a break of structure. After forming this particular other block, this is a break of structure over here too. So like I said, the weak examples doesn't work when we come to them when you are dealing with the chart. So you have to be very flexible, not predictive. You have to be very flexible when you are dealing with the chart. Very, very flexible as you can be. So look for your structure, your other blocks, your breakout structures and everything. Ready. This element is doing and everything like that. So like I said, you are talking about fair value gaps. You don't just use fair value gaps alone. You use it in conjunction with a lot of knowledge, with a lot of stuff to be done. So because when you just pick fair value gaps, you don't know this if fair value gap, these are fair value gap, these are fair value gap. You don't know which fair value gap to actually pick. So but when you use other conjunctions, other knowledge in conjunctions with it, you actually know the best one to actually use. So that's just it about fair value gap. But we never advise you to actually use fair value gap just like that. Just pick a fair value gap you don't know, start using it. We never know which fair value gap do not fit in going to respect. Except you actually juice every other thing with this. And just like other blocks too. The other blocks everywhere in the market, this is another block, this is another block, this is another block, this is another block. But without using the proper knowledge, the proper break of structure, the structure break, your change of characters and everything else together with it, you won't know where to pick. We never know where to pick. So that's it about anything POI and AOVs without using even everything about the charts without using proper like without using every other knowledge with bits, coming together and joining everything together, you never know where the right thing is to pick. But when we use everything together, it actually be a bias and makes you on the right side of the market. So that's it about that. And until the next session, stay safe.